but it's the Christmas edition, of course. So end of the year, end of the calendar year, because obviously we have a financial year and a calendar year. But end of the calendar year is quite special because for a lot of you, you'll be having some time off. And for some of you, you'll be making lots of money through the Christmas break. But whichever one it is, make it count. Okay, let's go through the market. National dwelling values fell 1% in November, the smallest monthly decline since June. National Home Value Index moved through a 7-month decline in November. So seventh month in a row, down 1% over the month to be negative 7% or approximately 53,400 below the peak value recorded in April 22. The decline comes after national housing values surged 28.6% higher through the recent upswing, adding roughly $170,000 to the value of the average dwelling in Australia. So obviously that in itself is saying that there's still a fair bit to go to wipe out what was gained. Just a lot. So it's not good. 53 minus 170. So work that out. 117. But interesting, I suppose. And then it talks about the individuals. So Sydney drop was 1.3 for the month. This is November we're talking about, of course. Minus 4.4 for the quarter and minus 10 for the so far this year. So annually minus 10%. So they dropped down without a doubt. Sydney's struggling the most with their downturn. Melbourne 0.08% drop, so not certainly as fierce as Sydney. Negative 2.7 for the quarter and minus 7% annually. Brisbane minus 2%. They've hit a downward spiral with a 5% negative quarter and still showing a 3.3% growth for the 12 months. Okay. Adelaide negative 0.3, negative 0.8 for the quarter, still showing a positive growth of 13.4 for the last 12 months in Adelaide. Little old Perth actually flatlined in November, 0. So that's a balanced market, 0 drop, 0 gain. But there is still a 0.5, so bugger all, negative in the quarter. And we're still showing a positive 3.9% growth for the 12 months. It seems low for us Perthians. And these figures never seem to really sort of reflect what's happening in Perth. I don't know whether that's because our urban sprawl, and a lot of some of us are in sort of western suburbs, city fringe, and whether I don't know, but it certainly doesn't seem like we've only had a 3.9% growth in the last 12 months. My neighbour just sold hers for 1.5 cash. I bought 3 years ago for 1.1. But good CMA for me, so I'm quite happy. All right, combined capital cities, negative 1.1, negative 3.5 quarter, and negative 5.2 for the annual. And we've also got combined regional, negative 0.09, so nearly 1% drop off, minus 3.6% for the quarter, and still showing a positive 3.3 for our regional clients and members. So nationally, we've got a 1% negative, a minus 3% quarter, and a minus 3.2 as mentioned before. So that's the state of play. Not super sort of stressful unless you're in Sydney. And I was talking to Daniel, my wonderful friend Daniel from Melbourne, and he said no, that prices are dropping there as well. So yeah, it's definitely, and then of course the interest rate hike Monday, Tuesday, whatever it was. Tuesday. Yeah. Certainly will put another whack. And I'll explain why I think they've done that, and probably Tracy can tell us exactly why they've done that. But
I have
an opinion on it.
They did it for Christmas. That's not a nice Christmas present. I really thought they wouldn't do it at Christmas.
Yeah.
But they're not nice.
Yeah, my thinking behind it is, while we're on the subject, is that I think they're probably going to ease off early next year. So they're doing it now. So it curbs spending, which is what it's supposed to do. And then early next year, they're going to, well, depending on what the inflation does next, over this Christmas period, they might pull it back a little bit early next year when people need it most. Who knows?
We'll talk about it a bit more later.
Yeah, sure. So potentially we are seeing the initial uncertainty around buying in a higher interest rate environment wearing off, while persistently low advertising stock levels have likely contributed to the trend towards smaller value falls. However, it's fair to say housing risk remains skewed to the downside, while interest rates are still rising and household balance sheets become more thinly stretched. There is still a possibility that the pace of declines could reaccelerate, especially in the current rate hike cycle persists longer than expected. Next year will be the particular test of the serviceability and housing markets stability as the record low fixed term secured rate of 2021 start to expire. So a big test next year. Across the capital cities, Brisbane and Hobart both down 2%, led the monthly rate to decline in November, while at the other end of the spectrum, Perth values held firm and Darwin nudges 0.2% higher over the month. Perth and Darwin markets are yet to record any signs of material reversal in housing prices. A competitively healthy level of housing affordability, along with tight labour markets and relatively strong economic conditions, have helped to insulate these cities from the downturn thus far. Across the broad housing types, unit markets have continued to run off relative resistance. Sydney remains the only city where housing values have fallen by more than 10% from the peak. Sydney home values remain 10.3 above pre-COVID levels. So that's interesting as well. Due to weaker upswing, Melbourne values are only 2.8% above where they were at the onset of COVID. Okay, let's look at stocks and inventory. The trend in new listing added to the housing market drifted higher through November. However, this year's spring listing season has been mild. Over the 4 weeks ending November 27, the flow of new capital city listings was negative 30.8% lower than a year ago, and minus 14.2% below the previous 5-year average. Because all my coaching sessions, people say, listings are tight. What is everyone else saying? What is everyone else saying? It's a national thing. Minus 30% on this time last year and 15%, give or take, on the 5-year average. All right, so there you have your answer. Across the cap.
What was that 5-year average?
Minus 14.2% below the 5-year average. All good. Across the capital cities, total listings haven't been this low at this time of year since 2010. And regional listings are at their lowest level since 2007. Wow. Yeah, that's huge. I mean, that's flipping 17 years. Yeah. This is likely to be a key factor offset the negative impact of higher interest rates and low consumer sentiment. Every capital city apart from Hobart recorded total advertising stock levels below the previous 5-year average. So listings are low all the way down. Morning, Damien. Morning. While advertised supply levels are lower than normal, so too is housing demand. Capital city home sales were estimated to be minus 23.2% lower than a year ago. That's massive.
Say that again.
So while advertising supply levels are lower than normal, so too is housing demand. Capital city home sales were estimated to be minus 23.2% lower than a year ago. So sales are down 1.6% below the previous 5-year average over 3 months to November. The largest fall is estimated home sales has been across Sydney, naturally, where the number of sales is down minus 38%. So they're doing it tough, okay? So they've got less sales, like dramatically less sales, nearly 40% relative to this time last year, and minus 23.9% below the 5-year average. Okay, that's Sydney. Hey, Ashley.
Alex.
Okay, so housing outlook. The trajectory of interest rates remains the most important factor of housing market conditions. The RBA has settled into a more moderate condensed of rate hikes, moving from 50 basis points increase to the cash rate 25 basis points October and November. Although RBA could revert back to more aggressive policy stance, there is a good chance Australian interest rates will peak in the first half of 2023, if not the first quarter.
That's wow.
Importantly, this takes interest rates to the limit of mortgage serviceability assessment recent borrowers were tested to or tested on. A lift in fixed mortgage rate refinancing activity from the second quarter next year adds to the downside risk higher mortgage distress. The RBA recently estimated around 35% of outstanding housing credit was on fixed term rates, which is higher than normal. Historically, around 20% of home loans would be on a fixed term rate. Further, the RBA expects about 2/3 of these loan terms will expire by the end of 2023, with borrowers facing a 3 to 4 percentage point rise in their mortgage rates.
I need to refinance.
Said by a great broker.
And get cash back.
Yes.
Or just sell.
Yeah, well.
Yeah, exactly,
Well,
Ash.
hopefully they sell and refinance.
And then downsize and we do their finance again.
There you go.
Yeah.
Persistently low inventory is helping to balance out the slump in housing demand. All right. I have missed something. Oh, rentals. Rental market across Australia remains extremely tight, with vacancy rates holding around 1% or lower in most regions. At the same time, net overseas migration has bounced back rapidly. That's good to hear. Reaching record highs in some states through the first quarter of the year. Most recent data, a trend that has likely increased further since that time. Despite such tight rental conditions, there is some evidence that rental growth is easing across some cities. While housing values are trending lower and rents are rising, gross rental yields continue to recover from recent record lows. So moving back into an investor market, which is something we haven't seen for quite some time. Feedback on that.